Hey guys. So I've been in Denver 2 years, and I really have not met very many libertarians. So I'm really excited to see. I don't know if you guys call yourself libertarian or what, but I'm excited to see you guys here. Before Denver, I lived in Atlanta. I was director of technology at the Foundation for Economic Education for 4 years, and before that, I was webmaster of the Mises Institute remotely for about 12 years. So that's my libertarian background. I suspect some of you are deeper into crypto than I am, so this will be interesting. I'm going to try to, it's always a challenge to be on multiple levels. Some people are brand new, and I'm explaining fundamentals. Some people are really deep, so I'll try to meet both aspects. Yes, I've been here 2 years. First, I was CTO for a startup, and I was taking music royalties, packaging them up as NFTs. I've been working as a Bitcoin consultant, and mostly what I do is people that forget their passwords for your crypto wallet, I brute force it using powerful graphics cards. I run billions of combinations and I get your Bitcoin back. So if you forgot your password or have some other kind of problem with your cryptocurrency wallet, you can come to me and I'll help you. Anyway, for my notes. Today I'm telling you why really the space is Bitcoin, not crypto. Let's get started. So what is Bitcoin? Bitcoin is decentralized, censorship-resistant money. It's an immutable bearer instrument, which means that if you possess the key, you can dispose of your Bitcoin however you want to, and no one in the world can stop you from doing that. It's an asset, not a security. We good? All right. It's an asset, not a security, meaning that it does not represent debt, equity in any enterprise. It's not a derivative of any kind. It has no shareholders. There's no corporation. There's no CEO of Bitcoin. There's not any other administrator that can make unilateral changes to your Bitcoin wallet or to Bitcoin. It has an entirely fair distribution, which means that it was worthless for several years before it had any value, and there's no party that had special access to Bitcoin allocation. It has always been the number one cryptocurrency by monetary usage, by market capitalization, and by ecosystem adoption from its beginning to the present day. It requires no special hardware to run, which means anybody with a normal computer can run a full Bitcoin node. So no other leading cryptocurrency or crypto assets meets any of these criteria. And there's none of the 20,000 other crypto assets that meet all of them. So the vast majority of crypto projects are scams created solely to enrich their founders. The few well-meaning projects are securities promising a future payoff, but few practical applications today. And no other project can be said to serve today millions of users for non-speculative purposes. The crypto space is full of scammers, grifters, and ignorant sycophants who believe their lies because they've been suckered into a shitcoin cult. And because they can only profit as long as they keep finding other suckers. The actual founders of these projects typically pull all their profits out back into Bitcoin or fiat as soon as they can get away with it. The sooner you understand that Bitcoin is unique, the sooner you can you can get away from pump and dump schemes and put your wealth into an asset that is actually likely to safeguard your wealth. Bitcoin is not crypto. It's fundamentally different. So tonight I'm going to break down the ways that Bitcoin is unique, critique some of the competitors, and then I'll answer some of the criticisms made against Bitcoin. And I'll start by talking about why Bitcoin. For those new to Bitcoin, why Bitcoin? And here's the anonymous founder of Bitcoin. This is his justification. The root problem with conventional currency is all the trust that's required to make it work. The central bank must be trusted not to debase the currency, but the history of fiat currencies is full of breaches of that trust. Banks must be trusted to hold our money and transfer it electronically, but they lend it out in waves of credit bubbles with barely a fraction of the reserve. That's from the Bitcoin white paper. I think it is. So what does that mean? More recently, our government and our whole economy is being capped by a giant everything bubble. Everything is backed by debt. And economists and people, everyone is assuming that the world will keep buying our dollar-denominated debt. But this bubble is going to pop. And when it pops, the dollar will collapse. It will lose its value. We'll see very high inflation, and the world will need a new reserve currency. In other countries, their fiat money, their bubble is already collapsed. And Bitcoin is already serving as a lifeline in those countries. Unlike shitcoins, what is a shitcoin? Shitcoin is a project that's not Bitcoin, that does not actually have practical utility in the real world, also known as an altcoin. And I'm going to argue that pretty much everything other than Bitcoin is a shitcoin. Unlike shitcoins, Bitcoin solves a real problem affecting billions of people. And that's why it has the most real world adoption. So why am I giving this talk right now? Well, we're in a deep bear market. And Warren Buffett said that when the tide goes out, you discover who's been swimming naked. And the tide has gone out. Tons of crypto companies are going bankrupt. The markets are collapsing, the crypto markets, because it's venture capital markets. They've collapsed harder than the traditional markets. And so we can see that a lot of projects are vaporware. They actually have no practical utility. So it's a good time to remind you why Bitcoin is different and why Bitcoin is not crypto. All right, so I'm gonna take a quick survey to see how what level you guys are on, so I can kind of tailor this to you. So who owns any crypto asset, if you don't mind me asking? All right, who has done some kind of blockchain development or been involved in blockchain projects? All right, cool. And who has never been involved, never been hands-on with crypto? A few. All right, cool. So again, I'm going to cover why I think Bitcoin is different. And the first reason is it's just better money, because it's just money. It doesn't pretend to remake the web or introduce exotic financial instruments or allow your company to run yourself as a DAO or create a new art form or have a new market for bananas. It's an actual crypto project. New market to buy and sell banana futures or something. It's just money. It's better money, but it's always been a money, and that's all it plans to be. It's a decentralized, digital, and scarce money. And Bitcoin is, because of that, as a use case, because billions of people today, most people that are not in Europe or the US are suffering from high inflation, and soon we will suffer from high inflation. So it's already useful, and people are using it all over the world right now to safeguard their wealth. Crypto is not any of these things because its leaders are more like politicians making promises they're not going to keep. Second reason Bitcoin is different is it's not a security. So there's a legal reason why and a practical reason why. There's a Howey test that's applied by the SEC as to where something is a security, and the definition is it's an investment of money in a common enterprise with reasonable expectation of profits to be derived from the efforts of others. And pretty much every other crypto asset is a security. Now, legal definition aside, why? Because there's a promoter that will profit if Bitcoin becomes valuable. There's an enterprise where you're depending on, there's usually a company behind it or one small group. And if you buy that asset, they will benefit. And it's basically a financial instrument. Bitcoin is not. There's no Bitcoin company. There's no promoter. It's a fair allocation, and you're investing in a money, not in some enterprise run by one organization. There's no one Bitcoin group that's running it. Bitcoin has no demagogues. So there's a quote from Corey Klippstein. Why is Bitcoin not a Ponzi scheme? The big difference is there's no entity or group of people that control Bitcoin who are marketing Bitcoin to be able to dump it. If anything, most people that promote Bitcoin are just buying and holding as much as possible. And people who love it the most are the people who never sell. It's a truly decentralized movement. There's no one organization, no one group that controls it. There's no Bitcoin CEO. The founder is anonymous and has been absent, MIA, for over 10 years. And because of that, it's a fair distribution. Meaning that Bitcoin was worthless for the first 2 years after it was created. It was free. Anybody could buy as much as you want. The founder, Satoshi, he did mine a bunch, but he's never cashed it in. And he's most likely dead or unavailable because he has been gone for so many years. Sorry, 1 second. Yeah, and besides that, he gave a heads up before he created Bitcoin. He published the white paper. Anybody at the time could run it themselves and could mine as much as they wanted. And he's never cashed out because he's been gone for over 10 years. As opposed to, let's say, Ethereum. Ethereum launched with a reserve of 12 million for the developers and then 60 million ETH reserved for people that participated in the ICO. So anybody that was part of the team or got in early got a huge chunk of the value of Ethereum during the initial coin offering. And the SEC is currently going after Ripple for doing similar things. And it's quite likely that Ethereum meets the same definition of a security, not a currency, and they're going to have the same issues once the SEC wins against Ripple. So the vast majority of crypto assets are actually securities by the legal test and just by common sense. There's an organization in charge of it, and when you're buying the asset, you're buying on the promise that they're going to work hard and make your financial instrument worth more. That's not Bitcoin. Next reason Bitcoin is different is this: it's number one. It's always been number one from the beginning. It's still number one. All other cryptocurrencies exist pretty much because of Bitcoin, because the way people normally get into a crypto project is by buying Bitcoin and trading it for some other crypto assets. That's the typical path. Because Bitcoin enabled global financial near instant payment settlement, and that made all these other projects possible. But it's also the number one in terms of market cap, ecosystem adoption, the number of people involved, number of ATMs in the world, etc. Next reason Bitcoin is different is that it's useful today to many people. So here in the West, we have pretty good money for now, and it's much easier to use a credit card in USD than Bitcoin. But in other countries like Venezuela, where you have hyperinflation, it's already saving people's lives, and I'll post some screenshots from that. There's Bitcoin ATMs all over the world, tens of thousands of them people are using. Zimbabwe, countries like that, countries that have currency controls. I lived in China for 5 years, and Bitcoin is still used there to evade the currency controls. It's already useful for those cases, and as a practical use today. Every other cryptocurrency, I would argue, is betting on the future, some potential use case. That's not Bitcoin. If those other cryptocurrencies ever do become practically useful, you can just buy them then. Like if you ever need some other crypto to buy bananas, like some projects are promoting, you just buy it when you need to buy bananas. Bitcoin is useful today to safeguard your wealth and to get it out of countries with currency controls. And then another reason Bitcoin is unique, the transactions are truly immutable, which means they're unstoppable. Nobody can reverse them. That's a track record that nobody can beat. Why is that? Well, for example, in 2016, in Ethereum, there was a DAO that had over $150 million worth of value and had a bug. And some hacker exploited that bug, and he stole all the money in the DAO. And so Vitalik, the founder of Ethereum, said, let's just fork the chain to reverse that transaction like it never happened. So instead of code being law, the demagogue in charge said, let's just roll back those transactions. So there's no principle in Ethereum that code is law. Code is law means that whatever the blockchain says, that's who owns the assets. In Ethereum, if they don't like how things are going, if they don't like that you have your Ethereum, they just roll back the chain. They did it once, they'll do it again if they have to. Other crypto networks are just not as reliable. So like Solana, in one of the top 10 crypto networks, has had 5 outages this year. So the whole crypto network goes down, they just reboot it. Think about it. If you can reboot a cryptocurrency, it's not really decentralized. It means you can centrally trigger, let's turn it on and off again, right? A lot of these cryptocurrencies, when they have a bug, they just restart them. How can you restart something that's decentralized if you truly have different parties that are running the network? It's not decentralized. It's just one company, and they have a bunch of servers in Amazon Web Services. If you're using these crypto networks, Ethereum, Cardano, Solana, etc., basically you're paying for Amazon Web Services indirectly, because that's where they all are, It's just a layer on top of Amazon Web Services to run a decentralized database, a very inefficient database, right? It's not really much better than just setting up your own database in the cloud, because really money is something that has to be decentralized. But banana futures, you can centralize that. You just have to trust one party, right? The world's not depending on somebody faking the price of bananas. So a lot of these networks should just be a centralized database running on Amazon Web Services, not a cryptocurrency. There's not really a compelling reason why it has to be decentralized, and they aren't. Anyway, I'm sorry, that's a rant. Last week, we had a Tornado Cash shutdown. Tornado Cash was a mixer where you can anonymize your Ethereum transactions, and it got on the OFAC list. I forget what it stands for, the list of foreign entities that the US government bans. And so they shut down the smart contracts. How did they do that? They shut down the website that runs it. They forced all the other crypto platforms to ban them. So if you wanted to mix your Ethereum on Tornado Cash and then cash it out somewhere, you couldn't, because every other crypto platform banned any transactions originating from Tornado Cash. Point is, it's not decentralized. Like if a smart contract can be banned by the US government, it's not truly decentralized. All right. So those are the reasons that Bitcoin is different. And now what I want to do is cover some criticisms of Bitcoin and talk about why it is the best cryptocurrency despite these criticisms. So number one, criticism is that it's not innovative, that all these other crypto assets do more. And it's true, they do a lot more than Bitcoin. All these altcoins, there's 20,000 of them, and whenever you want to launch a new cryptocurrency, you say there's Bitcoin and I'll add something to it, I'll change something. And at first, like Litecoin, they changed a few small parameters. But then like with Ethereum, they try to make them do more, they try to make them faster, etc. And they say that's why they're better. And I disagree for two reasons. One is just because something does more does not mean that it's more valuable. For the reason is that the value of a cryptocurrency depends on two things. It depends on its value proposition to users times its potential market share, right? So how useful, it's like a business. How useful is this business to me? And then how many people is this useful to? Like Apple computers. Everybody needs a computer, and that's a very good computer, and so it has a market cap of $1 trillion. So a lot of other use cases for these crypto assets that are not money have a very small use case. Like Ethereum is the number 2 cryptocurrency, has been for around 4 years, and it does smart contracts. Now, who actually needs, for practical reasons, not gambling, but for practical reasons, smart contracts today? It's not useless. It has some use for sure. It has some use, I don't doubt that, but it's much smaller than Bitcoin, much smaller. The vast majority of demand for Ethereum is other shitcoin scams, pyramid schemes to run on the Ethereum platform. There's very little practical adoption. There's actually no or very few real-world businesses running on Ethereum. As opposed to money, everybody in the world, every single person in the world needs money. And money is very useful. Not just money is valuable, but having a money generates tremendous value. The dominance of the US dollar since 1946 has created for the United States trillions of dollars in value, right? Just having a monopoly on the reserve currency for itself has, to the United States, has been worth hundreds of trillions of dollars. Just having a dollar. And Bitcoin, when it becomes money, will create trillions of dollars, maybe hundreds of trillions of dollars in value. All these other crypto assets that are other business models, they have very speculative business models, and most of them are just making up a bullshit reason to exist. Very few people actually need to use them. Like I said, there's a crypto asset that's for buying and selling organic bananas. It's just bullshit. Esports, NFTs, prediction markets. There's no reason why you need to be doing these things on a blockchain. You just need a database. You're just paying for an Amazon Web Services blockchain bullshit app that could easily be just a centralized website. All right. Second reason people get confused is they look at the market cap. They go to coin market cap and they see that Bitcoin has 40% market share. And they think, well, Bitcoin is really not that big of a deal because it's only 40%. It's really misleading because according to JP Morgan, the market cap of a crypto asset does not represent how much money has actually been, how much fiat money has actually been invested. It's closer to around a ratio of 50 to 1. So if you have a market cap of $1 trillion, actually 1/50th of that represents how much money has been bought into it. So the fact that Bitcoin is only 40% market cap, it does not mean that these other assets are truly worth more. Like, let me give you an example. Let's say I start a new coin called Veksler coin, and I sell and I create a supply of 1 billion Veksler coins, and I sell it to my friend Josh for $1. So now I have a market cap of $1 billion because I made $1 sale to one guy, and I have 1 billion coins. Now I can go to CoinMarketCap and say I should be up here because it's $1 billion. Now it's not quite that simple. You have to bribe a few people. Literally, you go to an exchange and you bribe them, list my coin, here's a few transactions, $1 supplies 1 billion, and you get up here. So the point is, these numbers are bullshit. Bitcoin is officially 40% of market cap, but in reality, it's captured the vast majority of incoming cash flows and the vast majority of investment in the space. And if you look at how much money projects actually have, like if you look at some projects like, I don't know, Cardano, they're worth billions of dollars, I don't know, $18 billion on paper, but how much money can they actually spend? How many people are actually on their team? A few dozen, a dozen people at most. So you think, oh, they have $18 billion they can spend. Not true, because it must be locked up. If they try to spend any of it, it would crash. So most of these projects, of these 20,000 projects, have a few guys, they're not even active. If you look at how much code they're committing on a daily basis, you know, they're lucky if they're committing once a week. More recently, the last year, we had a lot of venture capital. The top ones have been Solana, number 9, had hundreds of millions of dollars pumped into it, and it's crashed this year 5 times. The whole crypto network went down, hundreds of millions. So it's all for this bullshit token that they can't even maintain online, that they reboot when it crashes. Totally centralized is just, you're just paying for them to run servers on AWS, one company. So anyway, I'm sorry going on these rants, but the point is that these numbers are misleading. Bitcoin has actually captured vast majority of the value going into the space. Sorry, one second. Yeah, so I want to answer some other criticism. Sorry, I lost my place. Here. So anyway, I believe that the market will eventually reconcile these market cap numbers and the fundamental value of Bitcoin. And eventually, before too long, Bitcoin is going to reflect that it's fundamentally a superior cryptocurrency, and it will capture the vast majority of the market cap. Which is not to say that there's no use for anything else. Like, there's a use case for Ethereum. My point is just that it's a small fraction. And there may be space in the market for 2 crypto assets, right? There's crypto assets which are using cryptography to secure assets, and there's cryptocurrencies, which is a specific business model of using cryptography to make money. And so in the crypto asset space, I think there's room for 2 players. A cryptocurrency, which is Bitcoin, which will capture maybe 95% of the space, and the smart contract platform, which will very likely be Ethereum, which will capture 5%. And that's what it'll look like long term, not currently, where Bitcoin has 40% of the market cap, and then we have 20,000 other shitcoin tokens. So I want to answer some other criticisms about Bitcoin. And one is that all these other crypto assets are better because they're faster. because Bitcoin has high fees and it's slow. Bitcoin is slow. It confirms every 10 minutes, and it can only support, I think, 14 transactions per second. Maybe wrong. And so these other ones claim to support 5,000 per second, and they do. And how do they do that? Well, there's basically a choice you can make when you're designing a blockchain. You can have it be decentralized, scalable, or secure. Pick any two. Right? It's very hard for one blockchain to be decentralized, scalable. Scalable means that it can grow, it can be fast, and secure. And all these other networks that claim to be faster and support more transactions, they're compromising one of these things. So like Solana has, a lot of venture capital investment, and it's very fast. It can support thousands of more transactions per second than Bitcoin, but it's not decentralized because they're rebooting it, right? One guy is pushing a button to reboot the whole network. And it's not secure because it keeps crashing, and it's broken because you can't have all three. The way Bitcoin approaches scalability is they said, okay, we'll keep the Bitcoin slow, but we'll create other layers to process transactions. So we have a technology called Lightning Network, which is a second layer network. So instead of doing everything on Bitcoin, we're going to basically take some Bitcoin and deploy it to this other network, which has infinite transaction volume basically, and periodically we sync back to the main network, like your credit card. You spend on your credit card, and every month you reconcile, you pay your outstanding bill. So there's more to it than that, but basically that's Bitcoin's approach to scaling second layer networks, and we're seeing the same thing with Ethereum. Ethereum meant to be faster, but ultimately you're paying also very high fees, and now they have second layer networks. But anyway, so that's why the whole argument that Bitcoin is slow and has high fees misses the point that you can't have all three things, and it's better to compromise on the throughput than to compromise on security. Because if your goal to be the world's #1 store of wealth, the global reserve currency, it's better to be slow than to be insecure. Another criticism is that Bitcoin just doesn't do very much. It doesn't have its full smart contract support. So you can't run your business on Bitcoin. Like you can't have an automated smart contract that does payroll and will unlock a key if you die on Bitcoin. It doesn't support that. It's just money. And that's good because it's just money. It's much more compact. So you can run Bitcoin on your laptop, the full Bitcoin node, every transaction since it was created. You can't do it with Ethereum. It's just too big, requires too many resources. If you run an Ethereum node, and I do run one on my computer, you need a very powerful computer, and you're running the business logic of every single smart contract that network is processing. So I have a water-cooled 16-core computer with a GPU, and I have a 1 terabyte SSD dedicated for Ethereum, because that's what you need to confirm Ethereum transactions. You can run Bitcoin on any basic laptop, and it's going to get a lot worse. If you want to use Ethereum for all the world's business, you can only do that in huge data centers. It's not decentralized anymore. It's all running on Amazon right now. The vast majority of non-Bitcoin platforms that anybody's using are just running in Amazon Web Services. It's not decentralized. Okay, another criticism of Bitcoin is that the price is very volatile, which it is. And the reason it is because most usage right now is speculative. It's mostly people that are betting that'll be worth more in the future. And my answer to that is that Bitcoin is not money today. It's the future of money. People want Bitcoin to be money, and it'll become money once people start pricing things in Bitcoin and start using it for daily trade. And in some places they do, but only in places where the money is already really screwed up and facing hyperinflation. So assets become money-like over time, right? Something is not money at first; it's just an asset, and as you start using it for trade more and more, it acquires moneyness, and so over time, it actually becomes the money. Usually, in a civilization, there's one dominant money. So my point is that the volatility will go away once most assets are used to transfer goods and as a store of wealth and not as speculation. And that will take decades. But over time, it will become less and less volatile. And as that happens, as it becomes more and more money-like, it'll become less and less volatile. Another criticism of Bitcoin, as opposed to other cryptocurrencies, is that it uses proof of work. And they say it's burning down the planet. Because the way that you secure Bitcoin is by basically solving math problems. And now something like, it's less than 0.1% of the global energy production is consumed by Bitcoin, but it's still a lot. It's more than many small countries. And they say that there's a better solution called proof of stake. Now, this is a very technical argument, but I'll just say that proof of stake is still experimental. It's never been proven on a large large blockchain, and there's fundamental problems with proof of stake. And we've seen that because Ethereum has been trying to move from proof of work to proof of stake for several years, and they keep delaying it. And now they're saying that they'll do it in September. Maybe they will, but people are already saying there's fundamental issues in that proof of stake, which means that instead of solving math problems, it's all about who already has it, leads to cartelization, and there's fundamental problems with it. And it's a very risky move. And maybe if Ethereum does it and there's zero issues and it's like securing trillions of dollars, it'll be okay for Bitcoin, but it's still highly experimental, and it's not something you want to risk the global monetary system on. And so definitely we're not ready for mass adoption. Another criticism of Bitcoin as opposed to other crypto assets is lack of privacy, because there are privacy coins like Monero that actually obscure the destination of funds. Whereas with Bitcoin, it's all public. You can see Bitcoin is quasi-anonymous because every transaction is public on the blockchain. You can see which address owns it, but you don't know who the owner is unless you have some way to link them to a real-world identity. So Bitcoin is less anonymous than other assets like Monero. And my reply there is that that's true, but if you look at Monero, it has literally 100 times the overhead per transaction than Bitcoin, because it's using ring signatures and other technologies that generate far more data per transactions. So even though Monero has like 1,000th of the transaction volume of Bitcoin, the blockchain is proportionally far, far larger, and it could never scale to what Bitcoin does today. Like it would require massive supercomputers to handle the equivalent value of Bitcoin. We're just not ready yet. So if Monero right now is used mostly for crime. It's true. Like, and I'm all for being able. Yeah, like some crime is not actually immoral. Like if you use it to buy drugs, they don't object to that, but that's the reality. It's not ready for adoption, because if you try to use it instead of Bitcoin, it would be 100 times larger, and no computer can handle that kind of throughput. Because that's the overhead. And also there's fundamental risk with Monero. Like you can't count how many Monero coins there are because of the way it obscures the sender. And so you're just trusting that there's no bug that's enabling somebody to create infinite money. There's no way to count up actually how much Monero exists. You're just trusting the code works. And that's not a risk that the world's future reserve currency should be taking. So once we figure out the bugs, once we figure out how to actually create scalable anonymous money, we should totally go for that, but we're not ready to take that risk with Bitcoin. So another criticism is that governments will ban Bitcoin. And it's a whole other topic, but suffice it to say that governments can make life difficult for Bitcoin, but they're having a much easier time banning other cryptocurrencies, like we saw with Tornado Cash, where they just banned a smart contract. And so Bitcoin is not any worse in that regard. All right, I'll stop here. I've been going on for too long anyway. It's just 4 reasons why Bitcoin is number 1. It's the best money ever. It's the most decentralized cryptocurrency network. It had a fair launch, and there's no central planning or central team that runs it. Thank you.
Great talk. Thank you. Would you consider yourself a maximalist, first of all?
Yes.
Okay. So anything that you're hearing right now is coming from a person who liquidated their California pension and put it into Bitcoin. So my issue with this stance, CalPERS will not live as long as the Bitcoin network. Right. So my issue with the maximalist stance is the zero-sum sort of mentality. How many iterations of Bitcoin were there until Bitcoin's double spend problem was solved by Nakamoto?
Well, many. Depends what you count, but there were many over several decades.
Yeah, so the first like cryptography going into Bitcoin started in like the 70s, and then you see all this iteration, and then in the 90s you start seeing these free coin projects that pop up, and they failed because there was a centralized entity. So my problem with maximalism is that in the zero-sum game, it doesn't take into the accountability that there's a spectrum of decentralization. Like 15,000 wallets own roughly 9.5 million Bitcoin. So like how decentralized is this network when, you know, a small population of the global world owns like such a large amount of Bitcoin, which we don't even know is...
But Bitcoin is more decentralized than any other crypto asset, right?
I would also push back on that because in 2018, the SEC said that they viewed Ethereum as a non-security. So this is the zero-sum sort of mentality that I think is what discredits maximalism because you have Bitcoin, you have Ethereum, which are equally decentralized. Granted, you have to run...
That is not true.
Well, you have to run...
Centralized.
So there's spectrums of decentralization. So like if you want to run a dApp on Ethereum, you have to go through Infura. All right, so sorry. So my question is like when you take into the various different ways that we can have political, geographical, wallet distribution, and we see that money is decentralized for the first time in a great way with Bitcoin, and there were all these previous iterations before, why do we shit on other projects that are trying to build decentralized systems when it took Bitcoin dozens of iterations, and we want to get away from this world where like Twitter owns our data and our social security numbers are leaked by Equifax, who's supposed to create like protection for our credit scores. So in a world where we want to get away from centralized entities and things that we use every day, why not support the fact that just like Bitcoin took decades to get built, why don't we support the fact that we hope to see decentralized systems in decades that don't give Twitter all my information or Facebook?
Okay. So you brought up a lot of points. So let me touch on one of them. Did you like how I had a slide ready? You know, I anticipated what you guys would ask, and I had a slide ready to counter your argument that it's not a security. So the SEC's chair just said that Bitcoin is not a security, but Ethereum probably is. But anyway, what is Bitcoin? It's not a set of code. Bitcoin is two things to me. Number one, it's a commitment. There'll never be more than 21 million. It's a commitment by the community. And number two is it's the community itself working to evolve this protocol. Everything else about it is flexible. So if somebody comes up with better ideas than they have, there's been dozens of innovations in Bitcoin. They propose it to the Bitcoin community. There's a process, Bitcoin improvement protocols, and the community votes on it, and they adopt it or not. So Bitcoin is an idea. It's not a set of code, and it will evolve over time. And so there's nothing stopping Bitcoin from looking at these other experiments, and if somebody has a good idea, adopting them, and they have. But the reality is that there's very few other valuable ideas in other crypto projects that Bitcoin needs to adopt because they're just not important enough.
So thank you for this talk very much. I don't know if there's anyone else in this room appreciates all the dunking on shitcoins as much as I do. So my question follows up your comment just now. What is on your short list of non-shitcoins?
Well, I said there's space in this market for two projects, a money and a smart contract platform. Yeah. And the money is Bitcoin. The smart contract platform position is open, but I think it's most likely to be Ethereum. But it's going to be in the 5-10% range of market cap. And the main usage for smart contracts is stable coins.
So Ethereum is not a shitcoin in your view?
There's a lot of shitty things about it.
Oh, okay.
Right?
There's a spectrum to shitcoiny.
There's a spectrum.
To shit moneyness.
It's less shitty.
Yeah.
I'll say this with confidence. Stable coins are valuable, like USDC. Stable coin is a crypto asset that's pegged to some fiat money like dollars. That is a legitimate use case. We need a platform for it. Ethereum seems like it's going to win that race. But there's a lot of shady things happening in Ethereum, like the centralization, the proof of work move, other things. It's a spectrum.
Thank you.
Awesome. Thank you. Love the talk. It's great. I love Bitcoin. 2 questions for you, or maybe it's one, but it's kind of like a 2-parter. The first one is, it sounds like Bitcoin is more useful in areas, obviously, that have had high inflation, where the money just went to shit and they can use Bitcoin to trade. My question is, does the US dollar have to crash in order for Bitcoin to be usable? And how can we use it if the dollar crashes and Bitcoin is based off of US dollars? That's how it has its value.
What do you mean Bitcoin is based off of US dollars?
Yeah, like right now, 1 Bitcoin is worth, 20,000 or 22,000, whatever the amount is right now for dollars. Would there have to be a switch to the new currency of measuring dollars in Bitcoin?
Well, first point is that assets become money-like over time. They acquire moneyness. That's an actual technical term from economics. You have an asset that's not money, it becomes more and more money over time. And it does so in specific use cases. So in countries with hyperinflation or unreliable currencies, or like the CAR, they have the French franc, that's used to colonize and control African countries, and they want independence. So they're adopting Bitcoin as legal tender. So there's various reasons why specific use cases make Bitcoin useful. One of them could be dollar collapsing, or it could be something else. We know that the dollar is doomed in some way, and so I think that will be a catalyst for mass adoption. It could happen several decades, but I do expect in many other countries that already have unreliable money, as the ecosystem matures, we'll see adoption there first.
So just a couple comments on Dylan's discussion. I think attempting to measure the Bitcoin supply distribution by addresses alone is somewhat misleading, because some people can own multiple addresses, and some addresses represent millions of different people. So like, say, Coinbase might have 2 million users on a single address. And so and I think with Bitcoin, it's important, it doesn't really solve the value equity distribution problem, equality of value. It levels the playing field for all people trying to interact with that money, and it separates money from state. So those are kind of my comments. Not really a question. Sorry.
Yeah, it doesn't solve all the world's problems. It just solves the problem of money. By the way, how do we know if Bitcoin is successful? Just some slides, because coin market cap is very misleading. So here are the metrics that I follow: number of Bitcoin ATM installations, the Bitcoin transaction volume in dollars, the number of active Bitcoin addresses. So I think these are better metrics, and they're all trending upward, even though the Bitcoin price has been, not really going up for years per se.
Hi, David. Thanks. This was a great talk. We talked about decentralization, and I'm wondering, what are your heuristics for sufficient decentralization? So, for instance, if OFAC can roll up to your company and basically make you cut to the state, is that sufficiently decentralized?
I mean, there's no official definition that I can point to, but definitely there should not be any one entity that's running the project that can make unilateral changes. That's number one. And there should not be a monopoly in the block validation and the transaction validation. Those are the most important things. As long as there's no one entity that can stop transactions or make changes to the protocol, I would say it's decentralized.
Hey, I'm Hunter. I'm a Bitcoin developer, and I have to say, really good presentation. It's a good summary of really these topics, and I have nothing to disagree with or ask any questions on this subject. However, I would like to address a couple other questions that people have raised, and one thing about Ethereum is that if it transitions to proof of stake, which isn't a given, but if it does, then it has this sort of interest based introduction of money into it, right? Like the money supply becomes based on an interest bearing mechanism. And that's basically a recipe for wealth concentration, because those who can afford to stake and those who can put money in the staking pools instead of using Ethereum as a form of money, those people will concentrate wealth, whereas they'll be basically an ETH gentry, and the rest will be serfs, right? And so that's one reason why it kind of can't become the world's money, and it isn't really trying to become the world's money. But the thing is, money is one of the largest problems. It's one thing that has doomed to civilizations in the past. And so if we can fix the money, we can separate it from the state, then that's solving one of the biggest problems that humanity faces. And so really, Bitcoin is solving one of the biggest problems, whereas Ethereum is sort of relegated to solving these third world problems, or first world problems, I mean. And so really, and also with Bitcoin miners they have costs, right? They have to purchase electricity. They have to purchase space to mine, and they have miners. Whereas Ethereum staking nodes, they might have, a server in a data center, can't be shut off, it's not tolerant of intermittency. But regardless, with Bitcoin, it sort of supports a narrative of wealth diffusion, because if you're not actually working for a fair wage, you're just spending your earnings or savings, then which is what whales would be if Bitcoin replaces all the money, then they'll eventually just have to spend in order to eat. And so whereas with Bitcoin, it shouldn't matter the distribution of what other people's wealth is, right? It shouldn't matter how much money other people have, as long as you're all playing in the fair system. If you get to work for a fair wage and you get to purchase things at a fair price. So the Bitcoin, in its pursuit of becoming the world's money could be a major improvement. And one other thing I will say. Smart contract platforms are coming to Bitcoin to be built on top of Bitcoin. It's not really a platform. There's something called RGB and another thing called Taro that builds on top of Bitcoin as a blockchain, and no other blockchain or cryptocurrency as its fee token. It's basically layer 3, so it's built on top of Lightning and Bitcoin, and these store contract information off chain, and it's much more scalable and more private.
Yeah, all good points. I do expect eventually for smart contract platforms to be denominated in Bitcoin. So if you're investing in Bitcoin, ultimately you'll be investing in those platforms as well.
Okay, I have a question. So I'm glad you mentioned Monero and privacy, because that's basically my biggest concern. Also a comment, you mentioned Tornado Cash. So the Tornado Cash smart contract is still operating. It was not shut down. The front ends were shut down, so it's more difficult to use, but it has been used since it's been sanctioned. Someone sent multiple ETH to different celebrities to prove a point about how ridiculous this whole thing was. But the whole point highlights the need for better privacy, right? Because things like Bitcoin privacy tools, Samurai, Wasabi, Sparrow, which they're great tools, and I'm glad we have them, have a similar problem, whereas with Monero, you don't necessarily have that problem because you have much better privacy built into Monero. Now, most of your points were, I think, legitimate points about Monero, but Monero is slowly working towards that. They just had a hard fork, so they decreased transaction size, they increased privacy, and there's real world consequences for people for not using privacy. Seth for Privacy has a blog where about 30 different people or entities have been arrested in different countries for not using proper privacy tools. So doesn't Monero have a very legitimate use case, even if it's not perfect? And to follow up on that, do we even want Bitcoin to do that? Shouldn't Bitcoin's primary goal be to be solid money, to be replacing the Fed, and maybe Monero is a secondary money that can focus on privacy?
So one property of money. I'm sorry, I forgot the term. Units should be interchangeable. It should be fungible. Thank you. And so if we could make Bitcoin fungible, that would be an improvement. And I'm glad that Monero is experimenting with technologies that Bitcoin could adopt. There's been proposals to Bitcoin to make it more fungible. They're still too risky right now. So I'm glad they're doing that. By the way, Tornado Cash, the Tornado DAO has liquidated itself, and they returned all the funds to the users. So yes, my contract is running, but there'll be no more innovation. The team gave up officially. They arrested the developer, and the team that's responsible for the smart contract said that we give up. We're going to liquidate the DAO, the treasury that was funding development. So it's dead. But anyway, so I'm glad the Monero exists. I'm glad they're innovating. My point is that it's an experiment. It's not ready to compete with Bitcoin.
I have a question regarding Lightning protocol, because can you explain it slightly more? Because I always hear that Bitcoin is very good, but if you don't like Bitcoin, we will use Lightning. But almost no presentation, no explanation how Lightning works, how it's popular, how it's actually safe, how much is fast, and everything like that.
So the way that Lightning works, to be very brief, you have two parties that freeze some amount of Bitcoin on the Bitcoin blockchain and make it available to trade with each other on Lightning. And when they do that on Lightning, they can make infinite transactions back and forth virtually for free. So the best analogy is like your credit card. Most likely, there'll be large parties that are making some Bitcoin available in Lightning, and you can transact with them. So let's say Visa goes on Lightning. So what you would do is every month or every year, you would freeze some Bitcoin in the blockchain and deposit on Lightning, and then you would make a pair with Visa, and you could do infinite transactions for free with Visa. And every now and then, you need to you reconcile it back into your Bitcoin savings account, or you take some money out of your Bitcoin savings and deposit it at Lightning pair. But all Lightning transactions are virtually free.
What is the speed?
They're instant, well, almost instant.
No. For example, can it have, 1 million transactions?
Yes, easily. It's almost unlimited because it's two parties, and it's safe because if one of the parties disappears, you can take all your Bitcoin out. So there's extra requirements in Lightning that you have to maintain the nodes online, but there's virtually infinite transactions. You can do it instantly, and because it's a network, you can use these nodes to connect to any other Lightning node. So maybe David, connects to Visa's node, and Visa connects to Joe, and we can conduct nearly infinite transactions for nearly free. But the requirement is that we have to maintain those nodes online and periodically reconcile it back to Bitcoin. So it allows commerce at the expense of some centralization, but still Visa cannot steal my money because I can always just thank you. Yeah, my technology was lacking. Exactly.
I'll point out really briefly, the reason it's so fast is because the entire network doesn't have to verify all the transactions. Right. It's only the interested parties from one end to the other that have to even acknowledge that activity took place.
Right. You only care about the balance of payments in the channels between your peers, and so you create a network between these peers who only care about just who they're connected to and not like other people all the way on the other side of the network. And so it's not a global namespace that has to keep track of every transaction. It's distributed onto every single node in just their peers.
It's kind of like a bar tab. Okay.
Yeah,
Sorry.
No, we'll take it offline.
Next question. Okay, move forward.
Yeah.
I just find it perplexing that like in a room full of like free market people and basically free market economics says that competition is healthy and good. But maximalism is like, well, there can never be any other competition for money. But we know that lot of innovation has come from these quote unquote altcoins or shitcoins, namely being ZK snarks, many forms of cryptography, advancements across the entire spectrum of the industry itself. And it's like these new projects coming out, like the maximalist narrative is like, oh, don't look at it. But it's just crazy, because to me, it's like you're comparing, like, you're saying, well, you know, gold is great, but silver is toxic or terrible. And there's different flavors of cryptocurrency for doing things.
Well,
but that's the thing. Like, maybe there isn't. There's combinations of new entities, fusions of securities, and what we would consider traditional concepts of money. And it's very important that, you know, I think that we don't dogmatically label all of these things. I don't see, you know, my own like pushback of this is like, just because there's Chuck E. Cheese tokens out there, it doesn't mean the US dollar is like under attack, right?
Well, the problem is when people are dishonest. So my attitude right now is called toxic Bitcoin maximalism.
It's terrible. Yeah, it's turning
Okay,
people away from
the-
crypto, and it's
Innovation is good. Innovation is good. Competition is good. Experimentation in technology is a great thing. I'm glad that people are experimenting. The problem is when you as a marketer, because all these other projects are marketers, say, give me your money. This is going to be the next Bitcoin, the next big thing, right? What I'm selling as security. So it's awesome that Monero is, I'm not being sarcastic, is innovating. The problem is when these marketers are getting people's money, offering them securities, unlicensed securities, and making promises that are lies, and they are mostly lies. That's one. It's bad. Like Monero is one of the projects that I like more because it's truly a community effort. It has less bullshit. But you know, if you look at the coin market cap, vast majority, it's not a community. It's a marketer. It's a company. It's venture capital that's lying to you, saying this is not a security. It's going to be big. There's really meaningful business value behind it. It's lies I don't like.
Well, I just want to clarify one thing that you did say that's factually untrue tonight. You can look at like blockchain development trends report. You can look up the research on GitHub. The level of commits on altcoin projects far dwarfs what's happening on Bitcoin by design, because Bitcoin is very cautious.
Layers in the wallets.
Let us go on, and then we're gonna move on. So yeah, I mean, just look it up. Blockchain development.
I mean, maybe in total, I run a crypto hedge fund. It's my job to research specific projects to see if it's a worthwhile investment. And so I do go on GitHubs and I read the commits. And it's been my experience when I've looked at these other projects that the activity is low and the commits are low value. They're not actually innovating. They're just copying from each other. They're adding bullshit features that are not actually useful. That's me doing research for a hedge fund to decide if it's worth the money. That's my observation. You know, I only look at the few projects.
So I'm wondering, what are your thoughts about having a commodity-backed crypto, Bitcoin, what have you? You know, is it on? No. Answer your phone. Can you hear me now? No. I can hear you. Can you hear me now? Okay, I hear myself. So the idea of having a commodity backing, rather than measuring against the US dollar or any other currency that doesn't have anything backing, what are your thoughts on that?
Well, first I'll say that I think stablecoins are legitimate for some use cases, right? Because the world financial ecosystem is hardwired to run on dollars and fiat money, and it'll take many decades to switch over. So it's a useful use case. Now, for commodities, like is gold an example? Sure. Yeah. So I think there's a use case for that. Having a gold you can send across the world instantly. So I'm not against that, but it's not competing with Bitcoin. It's competing with the specific business model that is a tiny fraction of what Bitcoin offers.
And I would say that Bitcoin is commodity backed, and the commodity is energy.
Yeah, that's true. I agree. But Bitcoin is just.
Next question. We'll debate afterwards.
All right. So, Bitcoin maximalist, Bitcoin minimalist, or whatever. I'm to a basic person who just wants to be able to escape the system and turn off his damn telephone. Hold on a second. Yeah, I know. But anybody who wants to escape the system and remove themselves from the governmental play right now, what is the best move? Do we look at Bitcoin because it has so many backdoors in it? We think it has backdoors in it, or do we look at new innovation and say that we can, like you said, maybe pair Bitcoin with other cryptos out there? But for the average person trying to do regular business, maybe on the dark side a little bit, we know that Bitcoin has a good fundamental use there. I mean, is that a bad thing? I thought Bitcoin was introduced so that we didn't have to have so many laws and regulations.
Well, let me try to answer that. In terms of backdoors, Bitcoin has $1 trillion. I don't know the exact number now, but saying that there's no backdoors. Because if anybody, it's never been hacked in 13 years. It's like it's the world's biggest target for finding a bug. There's a $1 trillion bounty. So if I wanted the least, the most secure cryptocurrency, it's definitely Bitcoin. There's a $1 trillion saying that if you hack it, you get to keep it, right? It's not that simple, but basically like it's got the biggest target. If you care about anonymity, I mean Monero is good, but if you use Bitcoin properly, you don't need Monero, I think. That's debatable, and I see both sides. But Bitcoin can be used anonymously if you learn how to do it. And I think if your goal is long-term, protecting your wealth, Bitcoin is better than gold, property, any other asset. Long-term, like more, at least 4 years, probably more. Short-term, you need dollars, no way around it.
Last question.
All right, I get the honor of the last question. I had a few, but do you see the hard limit of 21 million Bitcoins as a problem? I do. And can you guarantee me that Bitcoin is
Why? Why is that a problem?
Well, because that's volatility that's baked in, right? If consumer demand for money increases, the only way that that means the price of Bitcoin will have to fluctuate. You basically
I got
baking
it.
it. So, do you see that as a problem? And also, do you think is that a promise that Bitcoin is not going to fork? Because what I'm hearing, is that Bitcoin. Are you talking about Bitcoin Gold, Bitcoin Cash, Bitcoin Classic, whatever it is, Ethereum Classic? Can you promise me it's not going to fork again?
Yeah. By the way, people don't know that in 2017 we had so-called Bitcoin wars, where Bitcoin forked. There was a disagreement where the majority of Bitcoin miners wanted to change Bitcoin, and some people did not, and the miners failed, even though they controlled the most hash power. So anyway, I said Bitcoin is not a set of code. It's a community with one idea, 21 million. So I don't think that number will change. And there have been forks in the past, but like in 2017, we had the most serious challenge to Bitcoin that I think will ever happen, in the sense that a majority of miners wanted to change it, and they failed. And we had Bitcoin Cash, which forked out of that, and Bitcoin Cash failed. And then we had 10 other clones. People disagree, but Bitcoin Cash is like 1% today of Bitcoin market cap. So I think it failed, and I think that was a bigger challenge than ever governments will ever pose, or nuclear war. The fact that most Bitcoin miners wanted to change that, and the community said no, and it failed to change that.
In your opinion, why did they back off?
Because it's complicated, but because what matters is economically participating nodes, not miners. When you run a full node and you participate in that, you are saying that I will only engage with this protocol. And if somebody tries to change that, and most economically participating nodes say no, that change will fail. So miners are a player But a lot of people don't get this. They're not the dominant or not the sole determinant of Bitcoin. What matters is the nodes that are transacting value in Bitcoin. That's why it's important to run a full node. That's a little off topic because I want to answer your question. Because it's an economic question. If we have economic growth and the number of Bitcoin is fixed, we'll have deflation. Correct. And we might have rapid deflation. And this happened before. Because in the 19th century, we had rapid economic growth and the dollar was tied to gold and you had massive deflation. During the so-called Gilded Age, the price of many goods halved or more. Because the economy was growing rapidly, you had factories being created for the first time, but the supply of dollars was growing much slower. And so you had massive deflation, and that's fine. It's great actually, because you save $10 and in 10 years it's worth 20, it's worth double than that. So I don't see a problem with deflation.
That's our talk. Give it up for David.